many investors see this disruption coming in the next 2 years. So these banks are going to have to figure out how to adapt to this and compete with it. And I'd argue, to this Voyager story and all of these guys that have gone bankrupt, let me all offer an alternative view. It's a good thing that happened. And it scrapes the patina off the market. It eliminates the idiot management. They'll never get financed again. The ideas that were bankrupt in the first place will never come back. The market remembers losses of $60 billion.
In today's video, Canadian businessman and entrepreneur Shark Tank star, known as Mr. Wonderful Kevin O'Leary, updates about the crypto market, his take on Bitcoin and where we are headed next in the crypto space. He also speaks about his thoughts on stablecoins, and why regulation is very important for the cryptocurrency industry to thrive in these volatile times, and urges investors to protect their assets moving forward while the suffering unfolds. Please let us hear your opinions in the comments section. Let's dive into his last interview now.
There was so much anticipation back in Miami just over a year ago about regulation coming and an opening up of global markets, pension plans, sovereign wealth funds coming into crypto, and obviously none of that has occurred. And that is actually why we're in a rut that we are right now. It also remains a huge opportunity. There is 2 points of light that I think people should think about that look interesting right now. There were a lot of bills coming forward, bipartisan bills in the House and the Senate about trying to regulate crypto. Now it's consolidated down to 2 initiatives. They're both bipartisan. One is very important. Since we last talked, there was a collapse in stablecoins. About $100 billion evaporated. The most, because it was decentralized, it wasn't much, it wasn't all in the United States. So the regulator, while being unhappy, it's not a domestic problem. It was based on bankrupt ideas, the idea that an algorithm could somehow stabilize a coin against the US dollar. That's proven to be false. We've had lots of pundits, Jamie Dimon recently calling it decentralized Ponzi schemes. He was speaking specifically to stablecoins, I believe, in that statement. However, at the same time, this bill called the Stablecoin Transparency Act is making its way. It's getting close to markup. And the reason it's interesting is it only does one thing. It only deals with stable coins that are regulated and backed by the US dollar. Nothing else. It's not trying to solve for NFTs, doesn't care about Bitcoin. It's basically going through legislation on a bipartisan basis as a payment system. And the reason you should be optimistic for this is why both sides of the aisle support this is it basically overnight, should it get regulated, creates the very first global payment system backed by the US dollar, making the US dollar the default payment system globally. And it will be adopted by every country except North Korea, Russia, and China. And overnight, it will make America even a stronger nation in terms of settling for financial services. So it'll be the very first crypto policy that passes, probably sometime after November 8th. But everybody in here should be optimistic about that because that signals the onslaught of more regulation that will deal with other digital commodities like Bitcoin and everything else. Great promises of Web3 and why we're all here today is that Web3 should signal the mass adoption of blockchain technology. And all of the dollars that are going into Web3 development are trying to do that, solving for the security of wallets, the ease of use of wallets, the transparency of the chain, making it adaptable and easy to use. And the killer app, I would agree with you, would be a downloadable app that would let me store my USDC, or whichever stablecoin I choose to use as a payment system, and allow me to use that anywhere in the world, in the countries that have adopted it, with a fraction of the friction fees. Imagine a credit card is 350 basis points. ACH transfer fees, SWIFT system transfer fees, all those fees. Now, you wonder why Jamie Dimon is trying to talk this down. I mean, this is threatening his book in a big way. And so just payment systems alone are going to really cause some headaches in banks because they love to transfer assets between themselves and charge you friction. Their gas fees are crazy high. And so this is the disruption and the potential. And I'd argue, to this Voyager story and all of these guys that have gone bankrupt, let me all offer an alternative view. It's a good thing that happened. And it scrapes the patina off the market. It eliminates the idiot management. They'll never get financed again. The ideas that were bankrupt in the first place will never come back. The market remembers losses of 60 billion. And so when you take out the weak managers, the people that didn't understand leverage, the idiot managers, the ones that really were rogue in the sense that they were just doing it for nefarious reasons, you're cleaning the palette. And what's left with is opportunity of stable opportunities like Circle and others that are doing it the right way, and FTX and all these other companies that are raising capital the compliant way. So I'm optimistic that over the next 24 months, should we get some regulation, the spigot of institutional money will come pouring into this space.
Jamie Dimon has been toxic with regard to crypto since the very beginning, but you can hear what they say or watch what they do. There's JP Morgan coin. That's how they settle effectively, is using a private blockchain. And they're offering crypto services to all of their wealthy clients. Yeah. So that even shows that as dismissive as he is, he knows that he either needs to get on board or get out of the way.
Well, let's be fair. I mean, he's a really successful manager in that space. I own JP Morgan stock, which hit a 52-week low yesterday, just so you know. And it's trading at an 8 multiple, which is one of the lowest it's ever traded at. And part of that reason is many investors see this disruption coming in the next 2 years. So these banks are going to have to figure out how to adapt to this and compete with it. And the best way I'd say is, I believe that the sector will be the 12th sector of the S&P in 10 years. So what's going to happen is financial services is a really big sector of the S&P. Some portion of that value is going to get transferred over to blockchain, the 12th sector, which doesn't exist yet. So you have to decide as an investor, there's 2 risks in investing in crypto. One risk is you invest in crypto. It's volatile and it goes to zero. Could happen. The other risk is you don't invest in crypto and all that asset value transfers over the next 2 or 3 or 4 or 5 years into blockchain, which is now providing some portion of financial services. You got risks both ways. I've chosen to invest in crypto and blockchain and many, many projects, including I'm a large shareholder of what Ben is doing here because I can invest in that company and it's regulated. I got no rogue anything. There's no Kim Kardashian SEC charge there. That's not going to happen. This is a regulated business in a market that's very advanced. The Canadian OSC, which is equivalent to the SEC, gave this guy an order that he is now allowed to have 1 million Canadians trading on a broker-dealer crypto platform, and starting beginning of the next year, fractional shares of equities. So in one account, you can have everything you want. You can have equities, fractional shares, real-time quotes, crypto, 40 different tokens and coins, right?
Yeah.
All regulated by the regulator.
Right, and regulated staking coming out soon, which will be the first in North America.
That's the first ever, yeah.
What are you building now, and how are you preparing for that next inevitable run?
You know, I'm involved in so many different financial services companies and also that issue securities under the mandate of the SEC. So, you know, we know the regulator, we know the system, and we don't breach it for any one project. We can't do that. It affects all the rest of the businesses. So, you know, going to your question about technology, I think if you think about mass adoption, there's 3 things that have to happen in, let's say, the next 24 months. The wallet has to work. And basically, the wallets, whether you're decentralized or centralized, for lack of a better word, are shit. Like they're just shit. And they're not safe, they're hard to use, the average person doesn't know what they're doing. The passphrase technology, everybody gets screwed the first time. You always start with, $250 and lose it immediately, you get it ripped off. It's always good to learn that, but that just isn't going to work. So we're going to have to, Web3 is about solving that problem. Number 2, we need security. You got to have much better security as you amass assets, even if it's just stable coins. But if you're starting to build a portfolio in today's world and you're putting some portion of your savings to work, I don't care whether you use Schwab or Fidelity or Interactive Brokers, you're not worried about security. They've solved that problem. They've built that trust. They've done it over decades, and you're happy to hold your assets. We got to solve that in Web3. You got to feel that there is security to where your assets are being held. And lastly, and just as important the other 2, we need regulation. All these people that were founders of this fantastic nascent industry that think it can't be regulated, never should be regulated, I thank them for where they got us to today, but now I want them to get off the bus and let the rest of us take this forward, because there's no way we're going to get that $1 trillion of assets in here without regulation. And that's the part that makes it mass adoption. When your grandmother wants to own some USDC, then you know you've made it.